Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. These are the names that I have covered in past videos, and I will do a quick review on each of them. In the later section of this video, I will also begin covering these new names. I've put in timestamps, so please use them to skip to the names that interest you. On 23rd of February, I described how Apple has completed a rising wedge and that the upside was rejected by the resistance trendline, which would eventually lead Apple into the bearish resumption phase. This has happened. Note that this week's drop is massive, and usually after big moves there are corrections, so don't be surprised if Apple goes higher in the next 1 to 3 weeks before resuming the downside. Stay bearish on Apple. The textbook target of the rising wedge is at 181.39. In the video on the 2nd of March, I cautioned that if Blackrock closes below the neckline at 943.34, then this double top bearish pattern will be complete. Blackrock completed this bearish pattern on the 10th of March over here, and the textbook target is at 804.34. I believe Blackrock has bounced off the support at 904, so we could get some near-term upside to slightly above the neckline 943.34 before resuming the downside. This is normal, rebounds are normal and are seen as part and parcel of chart pattern completions. Roche Holding is a Swiss name I covered in the video on the 9th of February, in which I said that it has completed a bullish pattern, a head and shoulders bottom. Since then, price action has risen steadily. I also said that chart patterns occur in 3 phases. There is the completion, there is the correction, and then followed by the resumption phase. This week's candlestick over here looks a bit like a doji. This is not a bullish sign nor a bearish sign. This signals indecision in price action and could go either way. In any case, I wouldn't be surprised to see Roche falling in the upcoming sessions, preferably to around the neckline, because this would fit the chart pattern progression of a correction first before the resumption. Roche remains bullish in my view, and the textbook target is at 362.5, but of course take note there is a resistance at 335.1 that can reject Roche lower when tested. Moving on to Citigroup. Citigroup is technically bullish due to the completion of a head and shoulders bottom. The textbook target is at 97.49, but in the video on the 23rd of February, I said that Citigroup was rejected by the resistance range of 80.2 to 83, and this risks a drop to 73.8, possibly even to the neckline at 67.81. Now Citigroup has fallen to the neckline, and I believe this week's price action to be a hint that it has bounced off the neckline. This price action also suggests downside exhaustion. As I've said, chart patterns occur in 3 phases. There was the completion phase over here, and I believe the recent decline to be the correction phase. I believe it would soon enter into the resumption phase, but just to be clear, I'm not saying Citigroup is immediately bullish from here, but now that it has corrected to the neckline, the resumption phase is near and there is likely limited downside going forward. So I'm staying bullish on Citigroup with a target at 97.49. In the last video on the 8th of March, I said that Home Depot completed a head and shoulders top, and the textbook target is at 323.98 with supports at 348.33 as well as 354.14. Home Depot fell quickly after the completion, but I suspect the next move for Home Depot is going to be higher first. This is the correction phase of the bearish pattern. I noted earlier in this video that big moves usually lead to some correction. Well, there was a big move over here on the 13th of March. Also, we can see that the latest price action has overextended below the lower Bollinger, which is also suggesting a near-term rebound. In this correction, Home Depot could rebound to the neckline at 381.72, but expected to lose traction slightly above it before resuming the decline. I noted on 8th of March that Euro Swiss was in the corrective phase, and a correction to around or even slightly below the neckline is common, after which it should enter the resumption phase. Euro Swiss did exactly that, falling to slightly below the neckline on the 10th of March before resuming the upside thereafter. Stay bullish on Euro Swiss. The textbook target of the head and shoulders bottom is at 0.9760. Moving on to new coverage, the first coverage that I want to start with in this video is on Hang Seng Index. It has had a good run since the beginning of the year, but I suspect that Hang Seng Index has bearish potential. Firstly, it may be forming a rising wedge, a bearish pattern. Second, there is price momentum divergence on the RSI stretching back all the way to October last year. Price action made new highs from here to here and to here, but the RSI did not make new highs. So this is considered a bearish divergence, a sign that there is going to be a near-term decline going forward. A breakdown below the support trend line will be a sign that the rising wedge has been completed. The textbook target is at 19,968.61. But if price action breaks above the resistance trend line, then this bearish pattern is invalid. Next, Mastercard is also displaying bearish potential similar to the Hang Seng Index. A rising wedge is currently being formed. The RSI is also showing price momentum divergence. As you can see, price action is comparatively higher, but the RSI is comparatively lower, so there is bearish divergence that suggests a potential decline going forward. A breakdown below the support trend line will complete this bearish pattern that has a textbook target at 432.4. A breakout above the resistance trend line will invalidate this bearish pattern. But just to note, this rising wedge still has some way to go, so I will not be surprised that the bounce over here would lead Mastercard higher towards the resistance trend line before getting rejected. Usually from textbooks, rising wedge do not get completed so early. It usually completes like 70 to 80% in towards the corner. So I will not be surprised to see Mastercard still forming this rising wedge in the weeks to come before an expected breakdown later in this year. The last one for this video is a famous shoe brand, Adidas. I believe that it has completed a rising wedge, a bearish pattern this week, and the textbook target due to this completion is at 168.55. There is a firm support over here at 209 that can bounce Adidas higher when tested. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.